Since the recent spread of the COVID-19 pandemic, which began early in the year 2020, there have been a large influx of new investors to all the investing markets and investing platforms around the world. Since this large spike of new people in the markets, new retail investors have been searching for some advice and guidance to successfully invest their money and make a decent return on their money. I personally have been learning and investing in the stock market on and off for the past 3 years with some gains and losses to show for it. So in this video, I will share what I believe to be the best 7 tips to invest in stocks for beginners in 2022. What up, good people? It's your boy Ant, and on this channel, I share advice, tips, and strategies on personal finance, business, investing, and the millionaire mindset. So if you want to learn more about how to improve your financial future, I encourage you to subscribe and hit the like button if you find this video helpful or valuable in any way. The first tip I would tell new investors looking to get started in the stock market is to know what your goals for investing in stocks are. I'm sure we've all heard the famous quote that if you aim at nothing, you're going to hit nothing. With anything in life, we have to set goals to achieve. Not setting goals is equivalent to driving around in a car expecting to get somewhere when you don't even know where you're going. You can't make it to your destination if you don't have one. Knowing the reason or purpose for investing in stocks will make it much easier for you to develop a strategic plan to follow to reach your investing goals. So whether you're investing for retirement or investing for income, it's important to establish what you're trying to achieve in the beginning to have some type of clarity in your investment decisions. The second tip I would tell new investors looking to get started in the stock market is to never invest with money you aren't willing to lose. All investments carry some degree of risk. There is no reward without some risk. This is especially true when it comes to investing your money in the stock market. There are plenty of horror stories of people investing money in a stock and losing all their money. No one is off limits. The stock market doesn't discriminate. Losing all your money in the stock market can happen to anyone. And that's why it's important to not invest with money you aren't willing to lose. So yes, it is true that the stock market is risky, but there are ways to limit your risk. Later on in this video, I will share my top tip on what I believe to be the best way to help limit your risk in the stock market. So stay tuned. The third tip I would tell new investors looking to get started in the stock market is to know your risk tolerance. Establishing your risk tolerance before you begin investing will make it much easier to choose what type of stocks to invest in. Because some stocks are riskier than others and offer a variable range of reward. For instance, conservative investors investing for the long term would want to invest their money into less riskier stocks like indexes or ETFs. But for more riskier investors investing for the short term will want to invest their money into singular stocks and maybe even buy options on singular stocks. In the beginning, it all depends on your risk tolerance and how much risk you're willing to take. A key thing to remember is that less reward equals less risk and more reward equals more risk. The fourth tip I would tell new investors looking to get started in the stock market is to know the economic cycles. Knowing the economic cycle that the economy is in before investing can definitely help you make better, sound investment decisions. Why? Because economic cycles have a major effect on what happens to stocks in the stock market. There are 6 economic cycles that every economy must go through to maintain a healthy balance and healthy growth. The 6 economic cycles are: number 1, expansion. Number 2, peak. Number 3, recession. Number 4, depression. Number 5, Trough. And number 6, recovery. The 5th tip I would tell new investors looking to get started in the stock market is to invest in areas that you know. Investing in different industries of the markets that you are familiar with may give a slight edge or advantage. Why? Because when investing in industries that you work in, or investing in companies where you regularly consume their products, give you information that you can use to make investment decisions. Meaning that if you work for your local gas company, for instance, and you know that in the wintertime you use much more gas to heat your home, that's most likely the same case for everyone else, and maybe you can invest your money into some gas stocks during the winter seasons when gas is more regularly consumed. So to find the best stocks to invest in, you can conduct market research to develop an investment plan, but sometimes the best research is already done for you from you consuming the products and services of the companies you regularly buy from. The 6th tip I would tell new investors looking to get started in the stock market is to get educated. If you are brand new to stock market investing, one of the best ways to limit your risk when investing in the stock market is to learn from someone that is already getting the results you want to see. This seems like common sense advice, yet there are still lots of people that think that they can just read a book on the stock market and become some sort of stock market genius and get rich with stocks. Stock market investing is a journey, and the best way to learn how to invest in the stock market is to learn the fundamentals from someone and learn from your mistakes by practicing and taking real-life trades. This is how I learned to invest in stocks, by buying courses from successful investors and learning from my many failures. The 7th tip I would tell new investors looking to get started in the stock market is to stick to one strategy and stay consistent. There is a lot of information online and a lot of people selling courses teaching people about the stock market. Too much information can cause analysis paralysis. Information can help you, but too much information can leave you stuck, not knowing which information to put to use and to put into practice. My advice to you will be to pick one. And when I say pick one, I mean to pick one of everything and go deep with it. Meaning, pick one person to learn from, pick one strategy to practice and perfect, and pick one company or stock to research and invest in. By narrowing your focus, you'll be able to eliminate unnecessary distractions and give you and your investment portfolio the best chance to grow and achieve your desired results.